The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, we have the Dow up 182. You get the Nasdaq up 58. S&Ps are up 19.5. If we go over to Europe and we take a look at Europe, you have the FTSE right now up 0.6%. The DAX is up 1%. And we'll come into our own S&Ps and take a look at what we have happening here. If we take a look at the futures, this is what you have happening. And by the way, I want to thank all the hosts last week there for filling in for me. You talk about a nice volatile week, man. That thing was volatile in spades. No two ways about that. Now, I expect you're going to see this volatility to continue in this marketplace. The S&Ps this morning we've hit 2090. The bottom, folks, what you have here is this. So picture this. We've been in a consolidation. The consolidation we've been in is going all the way back to February. Same consolidation. What we have now, however, is this, is that as we had come down last week, every day, whether it was up or down about 25 to 30 S&P points, you have a lower low that was going into your last swing points out there that we were in March. You have those lower lows established, and those lower lows are established with higher volume. So what you were doing there is that you were pushing into those levels with volume, building cause to get into lower price. That's how this whole thing is shaking out. The market today, now this is crucial today, and this is what it is. The downdraft that occurred from the 26th to the 29th over the weekend, okay, when we opened up Monday morning, was huge. That level on the S&Ps is 2083. Right now, you're at 88. So if you close over the 83, particularly if you close over 86, because 86 is the bottom of that level, that says, hey, that could be game that you're going to go to those highs. That's the bottom line. I expect what you're going to see happen, however, is that you're going to close under the 8325. And if you do that, what you have there is you have a failure on price and volume, and you're really just setting up a B2C of an ABC structure on the way down. So that's the larger picture for the end of the day. The shorter picture is this. Okay, we bring this back to a 10-minute deal. What you're going to see on a 10-minute deal is this. Is the expansion up this morning. The first three bars, they were decent. That's the bottom line. Is that even right up to the highs up there is 90 were decent. What you'd have to get first to get a breakdown is that you'd have to get a bar that is coming down with volume. That's inside your S&Ps. If we go to the NQs, we take a look at the NQs. You have just about the same type of setup. That is up there. The NQs are at their highs right now. You're at 6.9. They've hit 7.3. The NQs are into the downdraft from the 26th. Now, the NQs are stronger right now than the SPYs, and we'll see whether that basically continues. A failure on the NQs, they'd have to back down 19 points from where we are. We're up 61 points right now. They'd have to back down 19. If we take a look at the 10-minute bars inside the NQs, this is what the difference is. Now, this is what's really wild. What the NQs have done is that they did get over their highs, have lighter volume. The extension that went up is that they basically got to 7.2 with volume, then tested out on a 10-minute with 7.3. What that means is that the NQs have a larger chance to basically pull back with volume now. We'll see how that does shake out, but that's how that sets up on the intraday chart. If we take a look at the NDX 100 as to what's putting juice into the market versus taking it out, this is what you have. Garmin is the leader out there. Garmin is up $2.04. You get Win up $3.94. That's a dead cat bounce extraordinaire. That Win has got absolutely smoked. You have American Airlines, $128. Both American and Win dead cat bounce extraordinaire. On the way down, what do you have? You have Seagate Technology down 75. these storage companies have been getting killed. You get Western Digital down 61, Green Mountain's down 15, and Tesla is off 51. Inside the Dow Industrials, what do we have? Strength versus weakness. This is what you have set up here. Strength inside the Dow right now. Dow's up 185. Strength is Microsoft, up 82. DuPont's up 101. Caterpillar's up 117. And Visa is up 97. There's only one stock that's negative right now in the Dow. That's Chevron, is down 15 cents. We go take a look at the transports. What do we have? Now, the transports, folks, have continued into lower price. The transports last week, you talk about a breakdown. They had an extraordinary, well, the transports have been breaking down for a long time. That's the bottom line. The October 15th level, bottom line, still gaming in an extraordinary way. The transports have got into that level. The top of that is 81.69. Transports last week got into 79.70. And closed at 82. So the transports are going to be really important to keep your eye on, number one, because what you have is this. You got into the highs of the October 15th lows. You rejected them, which is the 8169. Now, the real key is going to be, how do you come out of that area, okay? If you come out of that area with volume, that would say, hey, guess what? The transports could have some juice in them. You come out of that area with lighter volume, what that is going to set up, that'll set up a much larger ABC structure on the way down, and it will build cause to get through that area. So the transports went from 93 down to 79, and bottom line, we'll see what kind of work it does in order to basically get out of here. If we go take a look at the SPY, what do you have with the SPY? Correlation-wise, we take a look at the SPY. The SPY's up $2 right now. You put this on a weekly basis, and what you're going to see is that we had an expansion of volume on the SPY. The SPY did 729 million shares last week, going into 645 million shares, going into 1.2 billion shares. The 1.2 billion is the December 19th area. SPY's still a game into this 191.15. That's the October 15th level. We take a look at the Qs. The NDX 100, what do you have with the Qs? We put this on a weekly basis also. Right now the Qs are up $1.55. What the Qs did, also had an expansion last week. We did 163 million. That was going into 163 million. Oh, that's interesting. So the swing low that was established on the 27th, the week of the 27th of March. We had got to 124.24, 104.24 rather, and last week we got to 105.83. Bottom line, same type of setup. You are building cause to get into lower price. Right now, if we take a look at the three Qs, the NDX 100, the first expansion at the get-go today, you had 1.4 million shares. Right now, the last, then 1 million shares, and then 700,000 shares. So you pop into a higher high right now. You get lighter volume. Bottom line, we'll see whether we get a rejection of price. The Qs themselves, the number on the Qs go like this. We're at 109.26. The low of the downdraft on the 26th was 108.86. A failure would be 108.66. So you can see the Qs would have to pull back 40 cents. No, actually, let's see. So you get 34, 44, 54, 64 cents. Right from here, the Qs would have to pull back 64 cents. The volume, you're not going to get the volume. It's 6.4 million right now. That is going into 50 million. Some of the high volume stocks on this market right now, you have Marathon Petroleum, must be a takeover. That's up $5. Facebook's up $1.98. You get Apple up 141. GE is up 18. Fitbit is up $1.60. Some of the Dow stocks out here, what do we have happening inside the Dow stocks? Marvell was up 17 cents. Exxon's up 23. You get Disney up $1. And if we do go over to the XLE, what is intriguing here too, by the way, folks, okay, is that with the markets up so much, there's equities that just can't move. I mean, that's a big number. I mean, it's pretty amazing, actually. We take a look at the XLE. XLE is still not moving. You know, you've come down from $83. You're at 73. The XLF. What do we have in the XLF? Okay, so this would be a cool one to watch. So the XLF is up 26 cents today. You're at 24.90. The failure would be a close under 24.79. So we'll see whether we get that. You're at 6.9 million. The difference in the XLF, by the way, today is that the XLF is getting a little juice underneath it today, meaning volume. Because your correlation, you're going against. Well, no, I guess no. Let's see. No, you're going to need a lot. Well, the XLF's going to be close. We're at 7 million shares right now. 42 million would be the number. You know, I don't know, 7.6 is a foot. It could do 42 million. And what we do have, of course, is that we're still in summer trading. And in summer trading, Friday, Monday, you can expect light volume, and we'll see where the price ends up. Oil. What do we got with the oil market? We take a look at oil. What you have with oil right now is this. Oil is trading out at 51.84. That came off the highs of 62. And we are testing the lows. The low of last week, the 7th, was 50.48. Right now, we're running 147,000 contracts going into 527. So what that's saying is that you probably get some kind of a slight bounce. That's on the shorter term. If we take a look at oil on the longer term, oil basically, once it broke off those highs again, oil's building cause a lower price. It's in a lower range right now. Once it got back inside 54, that's setting up oil at 42. Pretty wild. We're going to be spending less on our cars, folks. You stay right there. This is Tom O'Brien. This is TFNN. Coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We get the Dow up 197, Nasdaq's up 60, S&Ps are up 20. And as you come over to our website at TFNN, folks, you're going to see right on the top of the webpage the new TAS profile scanner is available right now. Now, coming this Wednesday, okay, John Logan and myself, we're going to be doing a free workshop. Bottom line is you can come over to our website at TFNN. You can take advantage of not only the scanner, no credit card involved. You put your name, your email. You can be up using this scanner. You can test drive simultaneously, complimentary access to our trading room, the Tiger's Den, and come to this workshop on Wednesday. Wednesday, 5:30 to 6:30 Eastern Standard Time. We'll walk you through the scanner. You'll be able to see how powerful it is. Bottom line, it's a huge value. The Tiger's Den itself is, $39.95. You'll get that. You'll get the scanner, and you'll get the workshop. So check it out on the front page of TFNN. Okay, market-wise, let's take a look at this baby out here. So volume-wise, what we have thus far is this. We're an hour into the marketplace. You get 150 million, which is bottom line typical for a Monday inside the summer. Inside the NASDAQ, you're running at 357. We take a look at the small caps. If we take a look at the IWM, let's see what we have with the IWM out here. The small caps, this is going to be interesting watching this baby. So check this out. So the IWM is coming into the downdraft also. All the indices are coming into the downdraft. The S&Ps right now are above it. The NASDAQ's above it. The small caps, however, right into it. We're into the 29th. You're into that with 6.8 million versus 49. So we'll see whether it basically handles it or not. The NDX 100, the Qs. The Qs right now are trading out at the 109.16 area, and that it's 108.66. That's the number. What has happened is this. This is what's intriguing about the Qs, is that the Qs got over the high, had the lighter volume, and now it looks like they're going to try to get into the 109.15 area. In fact, they're 109.13. Now, this is where this gets really dangerous for the Qs, folks, okay? This is pretty wild watching this shake out. The reason being is this. The difference is that the Qs didn't have the volume as they jumped higher. It's get back inside the 15 area. We're right at it right now. Then the key is going to be, do you go into that area and do you have the volume expand on a 10-minute basis? So it's 1.4 million that you're dealing with. You have, let's see, 1.4 million. You have 3 minutes left in this bar. So the correlation goes like this. In 3 minutes, if you close under the 109.15, it's going to have the shot to get into that bar with volume. So, we'll see how this whole thing lays out. What we have out here is that the European markets. So right now, our Dow's up 1%, NASDAQ is up 1.9%, you get the S&P's up 0.9%. The FTSE is up 0.7%, and the FTSE's not performing. The FTSE is coming right into the downdraft. In fact, let me put this up so you can see what's happening here with the FTSE. It really gets intriguing. The FTSE, you have the high volume swing low out here that was established last week. That's at 64.32. We're at 67.42. The correlation as to what type of, and this is where I think people are going to really understand, Greece, China, all of the above, they're all important. But what does happen is this. When these downdrafts take place, there's always something going on. Bottom line is that news correlations seem to have something to do with sell-offs and moves topside. They just don't, though. What their events, their news events, the buying and or selling of markets just happen. And once they start happening, bottom line, it takes a long time for either the central bankers or the governments to get control of the markets once again. If we go over to China, China is the ultimate in this, that the bottom line is that, when I was on vacation last week, everything's coming out, basically bottom line, China is going to save the world, save their markets. And guess what? If we go take a look at the Shanghai, what you're going to see is that the Shanghai came off the highs, dramatic volume. The highs that we're talking about in Shanghai, we're at 5,000 rather. You're at 3,900 now. It got to a low of 3,300. This is a monster ABC down, man. I mean, forget it. See ya. Don't want to be ya. Dow right now up 189. The Nasdaq's up 57. S&Ps are up 19. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow Industrials right now up 194. The NASDAQ is up 60. S&Ps are up 20. And if we go over and we start, we take a look at this gold market. So if we take a look at the GLD, this is what you have happening inside the GLD. We are at 110.67. Your benchmark out here is the low that was established as we came off those lows on the 18th of March. Now, 18th of March, folks, we came off that low, 12.4 million shares. Coming, the low was 110.09. The low that prior day got down to the 109.77. Either one of those days, you could take either one of them, and even as they jammed the market down, it didn't get down into that level number one. Last Wednesday, last Tuesday rather, let's say Friday, yeah, last Tuesday. Last Monday, right? No, last Tuesday. Last Tuesday, you got, on the 7th, we got down to 110.05. You did 9 million shares, and bottom line, you're going into 12.4 million. Now, that's on the daily. Now, check this out, because this is what you want to be cognizant of also. On the weekly, it's dramatically lighter volume also. On the weekly, what you have two separate areas you're coming into, and there's not enough sellers to break it down. Last week, we came down with 26 million shares. You're going into 39 million shares, which is the March 20th levels. You're going into 44 million shares, which was the November 2014 level. So what you have here, we don't have sellers. Well, we don't have buyers also. That's the bottom line. So what that market does need is needs buyers. We take a look at the silver market. We'll do the SLV inside the silver market. What we have in the silver market is this. Silver market broke out the lows, and you had the juice down there. So now, what happens at the silver market on the 7th, we got down to 1403, volatility right through the moon, that's for sure. The highs of the lows inside silver, and this is where volume actually on downdrafts can help bulls, okay? And this is what it is. So silver gets taken apart, goes down to 1403 on the 7th, has 24 million shares. The high of the 7th is 1457. That correlation, we'll see if that correlation is going to hold there. That's on the daily. Meaning, with the correlation I'm talking about is this, is that as you, then what silver had done, it went from 1403, the SLV rather, it goes up to 1497. It's backing down this morning to the highs of the low. It would have been nice, actually, if it went down to 1457. It's hit 1465. When you hit a high of a low and reject it, guess what? That can be the end of that move. Lower. If you did just the opposite, higher, that will be the end of that move. We take this and we put this on a weekly, and what you're going to see on a weekly basis is that it broke down under all those lows. We take this and we put this on a monthly basis. What you're going to see is that what you're doing is that 1464. This is pretty cool, man. Okay, so you're already inside the breakdown, meaning that you broke the 1464. We're at 1476 right now, and let's see, 63 million. What day is it? It's the 13th. This is going to be close, but this is what it looks like. Thus far, what we've done is this. So your benchmark on this baby is, here's your benchmark. Your benchmark is 1464. On a monthly basis, you're talking 183 million shares. Thus far, we've done 63 million. It looks, you get 21 trading days inside a month. It looks that you're going to have lighter volume, number one. You come in somewhere about 130 million. So you're going to have 130 million versus 183. All you need is that what you need now is you need to close at the end of the month over 1464. You'd have a rejection of lower price with lower volume. That would set up what? That sets up higher price. So it's going to be wild watching this whole thing shake out. If we go over to the euro, we take a look at the euro. What we have inside the euro is this. Euro right now is at 110.35, and the euro wants to basically try to get into the 109.16 again. Good old King Dollar. We take a look at King Dollar. What we have with King Dollar is that King Dollar's done 31,000 contracts today, and she. So 96.69 is the number on King Dollar. Right now, we're at 96.75. If King Dollar closes below this 96.69 today, that's going to be a failure. And this is what it is. As King Dollar come off the bottom, you know, last time King Dollar was down 93.30. Last time it had volume. This is always dangerous when you're trying to get higher. You had huge volume on the 29th, but it couldn't make the swing point. It couldn't make the downdraft that had occurred in King Dollar on the 2nd of June. That is always a problem, because why? Number one, you don't want to see volume come out of the equity right before, especially after when it's in a downdraft, before you up at the swing point. The swing point we're talking about is the highs of May. Then what we do, you get the expansion up here today. The real key is going to be, does it hold this area? You know, so we'll see how that whole thing does shake out. What I do expect you are going to see is that even coming into this close, let's see. So you got about another hour into Europe, and we'll see how the Europe can close, and if in fact it closes at its highs. Right now, it's pretty close to its highs right now. The DAX. The DAX looks the most dangerous, actually. The DAX is up the most right now, but what the DAX is actually doing, the DAX is up 1.5%. What the DAX is doing right now is it's testing also its downdraft on the 29th, and it's over it. Yeah, it's going to stay over it. It's let's see, the high 409. Yeah, we're at 485. There's no way the DAX is going to, well, it doesn't look like it's going to give back that much in the matter of another hour in the marketplace. We take a look at the financials. Go to J.P. Morgan Chase, because the XLF did have some juice out there, but J.P. Morgan doesn't. So check this out. You get 4 million. The 4 million is going into 19 million. That had come off those highs, And then what you also do have is that the financials do have a high volume swing low from last week. We take a look at the fear, if there was any fear out there last week. On the 8th, you had the fear coming in. On the 8th, we did a 3.1 on the arms. That's still not big enough, though, because what you did have is that on Thursday and Friday, it came in at 0.79 and 9.2. That didn't get that baby up for a bottom. That's what that comes down to. And what I mean specifically was that if that was a good bottom, what you would have saw inside that arms, folks, is that arms on a 5-day basis would have ran somewhere around 12 to 14. We take a look at the tick index. So inside the tick wasn't saying anything actually. So we got down to minus, on the 8th, you got down to minus 1364, which is not bad. Oh, this is cool. So check this out. This is really cool. On the 7th, right, you see that tick index got to plus 1457. When you see a market that has been going down and you get a fast tick upside like that, that is a huge problem, okay? Because what happens is that, as you know, you got the 1457. On a downtrend market, you don't get plus ticks of those levels without an immediate downtrend again, and that's what you got on the 8th. And on the 8th, what ends up happening, you got the minus 1364, and what that means is this. So the pluses and the minuses go like this, is that it means simultaneously the fear and greed are switching back and forth. And last week was extraordinary in the aspect of how that fear and greed was going back and forth. You know, I wasn't trading last week. I was on vacation. Bottom line is I was watching the market a couple times a day. And what you did absolutely see is like, oh, man, this is a trip. You know, whether you be up 200 or down 300, that is not an indication, folks, of markets that go higher. That's an indication of markets that are at very large changes in the texture of the market. That's what happens in large trend changes. And I suspect what you're going to see is that, and I expect you're going to see this today, by the way, okay, is that you're going to see a market that doesn't hold, and fundamentalists are not really going to understand why the market didn't hold because, you know, bottom line, everything's supposed to be fine in grease, and, you know, we should have higher prices coming at us. Never mind the aspect of how much money was lost in China. What I did read, and this I found this really intriguing, is that when the Chinese government said that anyone that owns more than 5% of an equity cannot sell it for 6 months, you saw the following day what ends up happening, and this is where money goes over borders immediately, and has gone over borders, is that you had Goldman Sachs and you had Fidelity come out saying they thought China was the best deal in the world right now, and you should be buying it. And specifically, you know why, folks? Because what happened is that they're trapped like rats, and their funds are trapped like rats inside of that. Because our own funds, just so you understand how this works, the funds on most of those equities own more than 5% of the equity, and they can't sell also. So the only way you can actually get in to bail something out is to do what? Hey, China's a great deal right now. You should be putting money in. And guess what? It worked in the aspect that the amount of money that went into the ETF structures after Goldman and Fidelity came out with that, I believe they came out with it on Tuesday or Wednesday, Tuesday, I think, that the amount of money did go in, okay? Bottom line, what does that mean? They're going to get sliced and they're going to get diced. The thing that is amazing to me is that the education value and that they didn't have to actually disclose. I was reading how they put it out, and what was blowing my mind is that they didn't have to disclose that they couldn't sell equities that they were already in. And then the other part of the China deal that is not out there and hasn't been out there is this. When China went up, when the bounce came in, there was 60% of the stocks that didn't trade because they were halted. So you can take it for what it's worth. Bottom line, nothing changes in this marketplace, meaning in the equity market. What the equity market is all about will always be all about, and you can go right back to Jesse Livermore, you can go back to the 20s, the 30s. It's all about accumulation, getting folks to put money into the market, keeping it in the market forever, and hoping that inflation over the course of years will have that making more money. 877-927-6648. Let's go take a look at those S&Ps, because what you have out here right now, we're at 1046 inside the marketplace. You got enough bars that are happening out here to see, okay, do we have strength? Do we have weakness? What do we have intraday? We're at 2088, and inside the the longer we stay under 2090 on the S&Ps, the higher the chance that we're going to go right down to 2080. Inside the NQs, will we take a look at the NQs, what we have inside the NQs? NQs right now are at 6.9, and the number on the NQs go like this. Well, actually, yeah, anything under 7.2. You stay under 7.2, the longer we stay under 7.2, the more probability that NQs are going to come back down to 5.3. You know, so it's going to get intriguing here watching this whole thing shake out. If you do the correlation inside the QQQs, what you have right now, we're at 13, 109.13, and the number is 15, I believe. Yeah, it is 15. So the Qs are still at it, but we're at 13. 15 is the number there. We take a look at the SPYs, what we have with the SPYs. SPYs right now are at the 209.37, and it's going to get interesting. So check this out. 56. Well, the SPYs are at 38, and 56 is the number. So the SPYs more than likely will give us the most amount of information much quicker, because the SPYs got up to 63. You're at 38, and the SPYs got to get over this 56, and it has to get over this 56. I'd say definitely within the next half hour. And this is why, because what ends up happening is that as you get into noon, 1 o'clock, if this market can't really expand, you're just going to get more distribution happening out here. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow up 194, NASDAQ up 60, S&P's up 19. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. We have the Dow up 197, Nasdaq's up 60, S&Ps are up 19.5, and of course, you just heard our man, Mr. Basil Chapman, is going to be coming up next with you, growling and prowling from 11 to 12. Steve Rhodes is going to be up from 12 to 1. We got our man, Mr. Dave White, 2 to 3. I'll be back from 3 to 5 this afternoon. Now, as you come over to our website at TFNN, folks, what you're going to see right on the front page is the TAS profile scanner. John Logan and myself, we're going to be doing a workshop Wednesday night, 5:30 to 6:30. You can come over. You can sign up for the workshop, sign up for the TAS scanner, and you also get a complimentary Tiger's Den 1-month subscription, all free. Bottom line is we just need your name, first name, last name, and email. So check it out on the front page of TFNN. Now, as you're over there also, you know, we've had our man, Mr. Chris Gaffney, on a few different times, the president of Everbank World Markets. Everbank has extended their metals market CD, okay? So you can come over to our website at TFNN. It's been a successful launch. Bottom line is that as you do that, what you're going to see is that the Market Safe CD, it's $1,500. This is extended, and it's extended till August 17th. So if you'd like to get that, and what happens with that, folks, is this. It's $1,500 minimum to open. You deposit. The principal is 100% guaranteed. There's no monthly account fee. It is FDIC insured, and it is IRA eligible. What does happen is it's a 5-year deal. The maximum cap at the top is 45% for the 5 years. Bottom line is that if you have an interest in the metals market in particular, this is a great way to do it. Why? Because what you have is that you know you get your principal back, number one. The volatility we know in the markets in general are huge. Metals markets are particularly huge. And what you have, this combines the power of gold, silver, and copper into one deal. So check it out on the front page of TFNN. We come over, we take a look at where we're standing right now. Let's say we take a look at the SPYs. What we have with the SPY is this. The SPY is at 209.41. And it looks to me like the SPY is going to be the one that really gives us the juice out here today, meaning the most amount of information. Right now, we're at 34 million. You're going into 202 million. That's on the daily. On the intraday, what has happened is that the SPY is the first one that can't hold the 209.56 area. You know, it's got the 63, but it seems like it's having a hard time there. So we'll see if that's the case, because it's tried 6 separate times since that area. The NDX 100, we take a look at the Qs, which we have inside the Qs. Qs right now are at 19, 109.19. The number in the Qs are going to have to back down quite a bit to have a failure. It can happen real easy. 86, it'll be 10886. That's one number. And where I'm coming from with that number, that was the number of how we closed on the 26th of June. The larger number, however, is that if the Qs close under 108.6, no, it's 108.66 actually. Oh, this is pretty cool. So you get 108.88, which was the low of the 26th. Then you have, so we're busted into that. That's 32 million shares. But it looks like the Qs should do 32 million, because right now it's 9 million. The second number, the big number to keep your eye on, is 108.66. This is Tom O'Brien. This is TFNN. You stay right there, folks. Great to be back with you. Dow's up 200. Nasdaq's up 61. S&Ps are up 20. I'm Mr. Basil Chapman's coming back up with you, growling and prowling with you. Have a great day. Have a safe day. Look forward to speaking right back here, 3 this afternoon. Go get them, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.